Hi there, welcome to Grain TV. It's Monday, January 4th. New trading year, but very little different results from last year. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, wheat was a leader to the downside, losing 11 3/4 cents. Corn off 7 1/4 and beans off 8 1/4, although it was trading down around 10 cents and managed to close a little bit stronger at the end of the day. Let's take a look at the March corn chart. We penetrated to new lows, touching on that 350 mark, but not able to penetrate below it, closing the day around 352. This is a market that just has very little to hang its hat on to get upside momentum. You've got competition from the international market of Argentina, where they have eliminated export taxes. They've reduced quotas. There's a good likelihood of lower currency values there, and so we're just seeing very, very little export business coming to the U.S. shores. The only sort of silver lining in corn is the South African crop, which seems to be in quite peril because of the drought conditions. But overall, this is a market that probably needs to continue to drift lower. My guess is we'll likely see 330 on March corn in the coming quarter. Other news out today, China had a really rough start to the new year, losing 7% on its Shanghai Composite Index. Some manufacturing index data came out that was well below trade expectations, and so that sent the Shanghai Index sharply lower. And as a result, global equity markets were down, and this really did very little favor for the grain markets in general, with the largest U.S. soybean producer, U.S. soybean customer, seeing its economy in deep trouble. Other news that came out today, we had export inspections that were very light in corn, coming in at only 325,000 metric tons versus expectations of 475 to 600. Soybeans at the high end or above expectations at nearly 1.5 million metric tons, and wheat coming in just at expectations. After the market closed, we did have some crushing numbers for both corn and beans. Corn use into ethanol or into alcohol was below last month's number in October, so we came in at 484 million bushels in November, below 494 million in October. For soybeans, crushing was 165 in November versus 170 in October. The only sort of uptick was in milo use into ethanol or into alcohol, and that's not surprising because we have such an abundance of milo as a response to Chinese demand. But then when actually we got the crop harvested this year, we had very little buying from China. So we have this excess supply of milo or sorghum in the marketplace, and we're seeing ethanol and alcohol users start to turn to that as an alternative. You know, the real picture today was shaped by weather in South America, and over the weekend, over the 3-day holiday, we continue to see improving conditions in that northern tier part of Brazil, which has been dry and been really the only sort of suspect region of that country. And so they got some decent rainfalls, not great rainfalls, but decent rainfalls in the 3-day holiday weekend. But the real bearish prospect is the next 2 weeks, where meteorologists are really pointing to fairly significant rains, really taking a stab at that drought and doing away with a lot of the problems they're having in that northern part of Brazil. And that really, I think, is what's going to sink this soybean market into the low $8. We just continue to struggle with export demand on soybeans. You know, crush numbers were off today, and we have the threat of a looming large crop from South America. By all practical measures, will come in at 100 million metric tons in Brazil and a bumper crop in Argentina. And with rains in northern Brazil, then we may push that number into the 102. I don't think we'll get up to 104 metric tons, but certainly in the low 100s is a distinct possibility. So all in all, this is a market that is bearish, and I think it's going to remain bearish for the next quarter, certainly into planting and maybe even into early summer. If you're a producer and you're really concerned about what your profit situation looks like in the next 6 months without hedging, then you need to be calling us at Grain Hedge to get some help in making some trading decisions. We can help you get into the market and get some protection if the market continues to move lower. Give us a call, 877-472-4607, or visit us online at greathedge.com. Have a great day and trade safe.